Hi everybody. I'm not Dr. Nick. Market condition, week of March 23, 2026. The global financial landscape for the week starting March 23, 2026, is defined by a hawkish pivot as central banks grapple with a dual threat of energy-driven inflation and cooling growth. Last week's geopolitical flare-ups in the Middle East, specifically involving Iran and the Strait of Hormuz, pushed crude oil prices toward $100, rattling equity markets across the globe. U.S. market performance and drivers. The S&P 500 closed the prior week essentially flat but with extreme intraday volatility. Technology and consumer discretionary sectors face significant pressure from rising duration risk, interest rate sensitivity, while energy was the standout outperformer. Sector key drivers. Last week, energy. Rising crude prices amid Middle East supply disruption risks. Technology. Multiple compression from hawkish Fed and rising Treasury yields. Financials. Higher net interest margins versus fears of economic slowdown. Healthcare. Defensive rotation as investors sought shelter from geopolitical volatility. Consumer discretionary. Inflationary pressure on margins and softening consumer sentiment data. Industrials. Strong capital investment in AI infrastructure and domestic manufacturing. Communication. Mixed earnings outlooks and regulatory scrutiny over AI dominance. Utilities. Lagged performance due to rising yields and high debt. Real estate. Downward pressure as rate cut expectations shifted to 2027. Materials. Commodity price surges offset by fears of global recession. Consumer staples. Resilience in pricing power despite rising input and logistics costs. Top expected movers. Large cap. Exchange. Expected movers up and risk factors. U.S. Nvidia. Dominating AI infrastructure as next-gen Blackwell chips reach full scale. Cooling AI demand are intensified chip export restrictions. U.S. Exxon Mobil, XOM. Surging crude prices and strategic Permian expansion boosting free cash flow. Rapid de-escalation in Middle East crashing oil prices. UK. Shell. SHCL. Benefiting from global LNG supply crunches and robust share buybacks. Windfall taxes or sudden shifts in carbon legislation. UK. BAE Systems. BA. Record order backlogs driven by heightened European sovereign defense spending. Project execution delays or reduced global military tensions. European. Novo Nordisk. Novo B. Unprecedented demand for Wegovian's successful expansion into cardiovascular health. Generic competition or regulatory price caps on GLP-1s. European. ASML. Monopolizing UV lithography essential for the 2 nanometers semiconductor manufacturing transition. Protracted downturn in consumer electronics and logic chips. Japan. Toyota. 7203. Hybrid dominance and solid-state battery breakthroughs driving record global profitability. Significant yen strengthening hurting overseas earnings conversion. Japan. Mitsubishi UFJ. 8306. Rising domestic interest rates expanding net interest margins for lenders. Bank of Japan reversing its tightening policy stance. Hit the subscribe button to stay informed. Which of these 8 stocks is in your portfolio? Leave a comment. Conditions and trends. U.S. markets are shifting towards stagflation fears as growth hits 0.7% while inflation stays sticky. UK and European markets are bracing for rate hikes as energy costs spike. Meanwhile, Japan faces high volatility as the yen hits 20-month lows, prompting potential government intervention despite bullish long-term ROE targets. Here at the Stock Market Performance Playlist. Is this week's stock terminology learner? What is the duration risk referring to interest rate sensitivity? Duration risk measures a bond's price sensitivity to interest rate changes. If rates rise, bond prices fall, longer duration signifies higher potential price volatility. Leave in the comments what term you want defined in the next video. Anticipated news, forthcoming week. Investors await February retail sales data, expected to show a decline due to harsh weather. Key non-farm payroll reports will signal if the labor market is finally cooling. Markets will also monitor the Strait of Hormuz for any further military escalations, which could send oil into triple digits and force more aggressive central bank tightening. Help us to bring you the best content possible. Subscribe, like, share, comment. We're polling right now. What price do you think oil will hit by the 28th March? Go to our community post tab to cast your vote. 2 broker offers. Sign up for rewards. See links in description. Bye, everybody.
This is the Stock Market Performance Playlist, the sound of victory. Peace.